My beautiful friends, my lions, my lionesses, and my beautiful, perfect lion cubs. We have to talk. I know I'm kind of joking here, but I'm going to get serious. As I am doing this video blog, the bond market is again a complete and utter disaster area. The U.S. 10-year yield, I just looked at it, is 2.1. It was 2.07 earlier today. And the stock market has been all over the place. Trading has been on for just about 40 minutes as I am doing this video blog. At the open, there was a surge of buying. Miraculous surge of buying in the market. Dow Jones Industrial Average up by about 75, 80 points. Then it reversed, went into the negative, and again it's trying to come back up. But I want to show you something here. And this is, people always ask me, this is the CNBC app. You can get this on your smartphone. Now, let's look at this real quick. The 1 month, look at the 1 month right here, 2.345, okay? Let's go down here. Here you go, 10-year, 2.107. I mean, the 1 month is blowing the 10-year out of the water, and the 30-year is 2.55. This cannot be ignored, and it really looks like a tipping point here, and I've covered this recently at length. I've explained to you how we have two opposing forces, one much larger than the other, the debt market, which is slamming up against the stock market. Look, no secret, for over a decade, suppressed interest rates have opened the door, allowing cash to flow into the stock market. The middle class is subsidizing it all by being robbed blind if they have a savings account because they're earning interest less than the actual rate of inflation. That cash that would be going into the pockets of savers instead has been helping to push the stock market higher. Now, with the bond market looking like that, and I explained this to you last week, we're going to see a lot of volatility in the market because it seems like, again, these two opposing forces are slamming against each other over and over again. Here's what has to happen here. A few things. The Federal Reserve, well, actually, let me back up a moment. A lot of the major banks now are reporting, Morgan Stanley being one of them, that they're expecting 2 cuts from the Fed this year, 2 rate cuts. What would that do? It would be a Band-Aid on the bond market. The yield curve would actually become a curve again instead of what it looks like now, like a dish. And it would also, if we were to get even one rate cut, and I do believe this is coming, it would have a temporary effect on the market, again, until that hit of heroin runs out. Because that's all it is. The market's addicted to the easy money. And every hit is going to have to get bigger and bigger to achieve the same results. You understand? It's literally like a drug addict. I had said that this market needs, forget about a 25 basis point cut to the federal funds rate. We need a 50 at a minimum. Okay, President Trump said a 1% a while back. It's pretty incredible. But the president's actually right here. In order for the market's going to need a very large dose of heroin to keep it propped up, or it's going to need a trade deal or a combination of the two. The bond market is sending us a very, very ominous signal here. Now, let's talk about that again real quick. We found out this morning the ISM Manufacturing Index, literally people fell off of a cliff. And I've been explaining this to you for I don't know how long. Industrial production falling off a cliff, manufacturing falling off a cliff, retail sales, I mean, abysmal, the auto industry collapsing. We're going to start to see waves of layoffs. And of course, they're going to push the fake U3 unemployment number on you. You got to look at the U6. No one's going to tell you the U6. You have to look it up for yourself. It's more than twice the U3. And there are those out here who believe even that number's fake, the U6. I'm just going to go by their numbers, the U6, which is the actual true number, or according to them, with regarding unemployment, it's more than twice the number they're telling you it is with regard to the U3. I know it's confusing, but that's the whole plan here, to keep you off balance, to not let you understand what's going on. It's very simple. It's a very simple concept that's been successful since time immemorial. It's very sad how people are strung along by the lies, by the propaganda, by the misinformation, and there are certain groups of people that just eat it up because they want to. They literally they need something to grasp onto, so they grasp onto that. And it's very sad to see that happen. But I think for the most part, people are getting it. They understand what's going on. This non-existent yield curve, I mean, it's an abyss. And again, talking about an abyss, there's no bottom here in this stock market. If we do not get some type of propping up mechanism here, like at least one cut to the federal funds rate, 50 basis points, some kind of a trade deal coming through here, our economy is going to fall into a very, very deep recession, maybe even depression, which would be global, because all of the world's central banks have been doing the same thing for over a decade, artificially suppressing rates, inflating bubbles, causing malinvestments across the spectrum of asset classes. I mean, it's so in our face. And I'm just happy to say that, you know, this guy here has kept all of you aware of this months, if not years, with regard to the yield curve before it happened. I mean, how many of you remember the ridicule that I had to take when I was trying to explain to people that this yield curve was going to invert? I can't tell you, Greg, you're an imbecile, you're an idiot, you don't know what you're talking about, it's never going to happen. I had a guy bet me $100,000 that this yield curve would not invert. I did not take the bet. Should I have in retrospect? Sure. But I don't want to take people's money from them. That's the truth. Everything I do is free. You know that. I would rather that guy, maybe if he's a real man, and you know who you are, if you're out here, you'll take that $100,000 that you were going to bet me and donate it to a charity that you believe in. But you won't do that. And if you do, if you send me a copy of the check, you know what? We'll talk. Maybe I'll even match it. Okay? Anyway, with that said, crazy world we are living in, people. Absolutely crazy. Keep your eye on that bond market. Forget the stock market. That's where they want you to look. Look here. Look here. That's what they're going to do. And expect the volatility in this market to continue as these two opposing forces continue to slam into each other. Something has to happen for this market to move higher. Otherwise, people are going to get hurt. And people are going to get hurt in a big, big way, which is always the plan. I mean, understand, the Federal Reserve, world central banks, and their leaders, collectively, they are serial bubble blowers. They inflate these bubbles. They get the average guy, the average girl to pour their cash into an account like a 401k that only makes money when the stock market goes up. There's the mechanism that they use. They weaponize it. Then all of a sudden, when they're ready, they pull the plug. And all that cash gets legally stolen or transferred from the masses to the 1%. And it's a repetitive cycle. It just doesn't stop. But people they get blind to it. People don't want to look at history. They don't want to learn. They don't want to read a book. But these are the facts, and they're undisputable. It's incredible. But this is the world we live in. The world of the dumbed down. Very sad. And I want you to make a difference, people. Look, if you think this is important, my work here, the way I explain this to you, because I do think I lay it out in a very understandable way, please share these videos. Get them out there, and I can always use the thumbs up. People, we are responsible for each other. I don't know another way to put it. We have to embrace that. We have to effect a positive change in the world. And it starts with you and me. Because who else is going to do it? It's up to us. Anyway, I'm counting on you to share this video. Get it out there. I love all of you, and I'll see you at the end of the day.